In June 2021, Chamath Palihapitiya helped bring SoFi to the public eye, and it's now considered a top investment opportunity. SoFi's members have grown by 61%, making more money than ever. Although the stock price is undervalued at $7.25, the company's rapid growth suggests a potential for a great return on investment. So today, let's talk about everything about SoFi stock, which Chamath Palihapitiya thinks it is about to be unstoppable. Recently, SoFi announced their earnings for Q3 2022. And during the call, the CEO shared 3 potential factors that could benefit the company in the future. In the short term, one of these catalysts is the current high interest rates, and unlike competitors such as Robinhood, SoFi's focus is not just on their investment platform but on using this as a way to attract customers to their wider range of financial services. Their most valuable service is lending, which started with student loans at Stanford Business School and has since expanded to other areas. This gives SoFi an advantage in the current climate of rising prices and interest rates. It's a bit like going for an oil change and being offered additional services. And the goal is to build a loyal customer base who will continue to use SoFi for their financial needs. The Chipotle Burrito Index is a way to measure inflation, showing that it is very high. Even though it can be tough for consumers when prices go up, inflation can benefit certain institutions like banks. SoFi, for example, can lend money at a higher interest rate and use older money at a lower interest rate to earn profit on the difference between the two rates. And as interest rates increase, they can make even more money. An expert has shown that even a small increase in interest rates can lead to a significant boost in a company's revenue, such as Charles Schwab's earning a 6.2 increase with just a 1% rise. Analysts expect a 3-fold increase in SoFi's net interest income from $252 million to $703 million by 2023. In addition, this projection is even higher than SoFi's forecast. Furthermore, it may come as a pleasant surprise to the market when the company reports better than expected earnings, resulting in a potential increase in stock value. There's another big event on the horizon that will majority impact SoFi in the coming months. The federal moratorium on student loan payments is set to expire. This means that many Americans who have federal student loans will soon have to resume making payments. This is a significant development for SoFi, as many of its customers are likely to be affected. Before the pandemic, SoFi dominated about 70% of the student loan market, which unfortunately dwindled in recent years. And despite the setback, SoFi avoided catastrophe by swiftly transitioning to other loan markets, particularly personal loans, as evidenced by their most recent financial report. However, with the end of the student loan freeze, SoFi can expect a resurgence in that lending sector. Now, let's explore the potential impact of SoFi. If they can boost their student loan originations from $3.3 billion to the $8 or $9 billion they had in 2019, it could double their revenue from lending. This seems achievable since most of their borrowers are ineligible for student loan forgiveness. This would increase profit from about $450 million to almost $1 billion per year, and this would be a significant boost for a company valued at $5 billion. It's worth noting that adjusted numbers don't consider expenses such as stock-based compensation. However, the biggest thing that will drive SoFi's growth in the near future is still this factor. And as for the third catalyst, we'll have to look further ahead to at least 5 years to see SoFi's true potential. As people flee traditional banks due to high fees, low APIs, and poor service, SoFi is gaining market share rapidly. To put into context, think of a hamster munching on carrots at lightning speed. That's how SoFi is growing. For instance, let's focus on SoFi Money, which comprises checking and savings account. SoFi witnessed a 72% increase in membership, maintaining an impressive FICO score of 750. Moreover, 85% of their deposits are from direct deposit customers, indicating their long-term loyalty. This highlights how SoFi Money is outpacing 99% of banks while the banking industry struggles. So, why is SoFi so popular? It could be due to their impressive interest rates for checking and savings account or their targeted marketing towards younger generations. Additionally, SoFi's range of products complement each other and attract customers who are enticed to try even more valuable services. The data suggests that more and more people will choose digital-first companies like SoFi over traditional banks in the future. And other of the various digital banks, SoFi stands out as a top contender to thrive in this market. This is evident from Chamath's decision to take SoFi public. While understanding stock trends is vital, having a reliable investment platform is equally crucial. Now, before we continue, I'd like to thank you for getting this far. And if you want to know more about what Chamath thinks, then make sure to watch this next part. Now, let's focus on SoFi's stock price and Chamath's recent remarks in a podcast where he believes we have already surpassed the market's lowest point. If big companies in the S&P 500 are experiencing a drop in stock prices, it could indicate that no more people are selling and a rebound could be on the way. This is crucial when looking at small companies like SoFi, whose value depends heavily on future earnings. And despite a 50% annual revenue growth, the market is undervaluing SoFi and trading at a lower book value than it should. This presents a potential opportunity for investors if the market begins to give SoFi a higher value. However, it's important to focus on a company's actual performance before investing rather than trying to predict market movements. Now, we'll explore the reason behind SoFi's stock price surge and subsequent decline after its recent earnings report. SoFi operates in three main areas: financial services, lending, and technology. SoFi's financial services, including their app, have experienced incredible growth this quarter. This app alone saw a huge increase in products sold and several members, leading to even more sales in their lending business. While lending saw a more moderate increase in products sold, the contribution profit was still impressive. This is all thanks to SoFi's high-income customer base, who tend to make the company more money using both the app and the lending services. SoFi's strategy is clearly working, as each new customer they acquire is more profitable than the last. Lastly, we shouldn't overlook the potential impact of SoFi's technology platform. They acquired Galileo and Technisys, which make up the backbone of their platform. The goal is for it to become the go-to platform for fintech, like how many websites run on Amazon Web Services. This could mean that SoFi's technology could be the unsung hero behind every financial transaction in the US. We've seen their plan to grow the tech platform start to take shape this quarter. So far, SoFi has mainly focused on selling directly to consumers. However, their technology platform has enabled to expand into business-to-business market, with 30% of its net sales for Galileo coming from this sector, mainly outside the US. This move is crucial for SoFi's future for two reasons. Firstly, it provides income diversification, reducing their dependence on consumer sales, which can be unpredictable, as Robinhood experienced. Secondly, selling to business on a contract basis provides a more stable income stream, as companies are less likely to cut spending on essential services even during a recession. Furthermore, SoFi has its sights set on controlling the technology that will power the next generation of financial services. Say goodbye to long wait times for money transfers and paper checks. SoFi's revenue has increased by 51% yearly, with a 69% increase in product sales across all segments. This is a remarkable achievement for a company of SoFi's size and business. In comparison, other banks such as Bank of America, Wells Fargo, JP Morgan, and Robinhood are struggling to maintain their earnings, and so SoFi stands out as a clear outlier in the industry. Moreover, SoFi has increased its earnings forecast for the next quarter. This, along with other positive factors such as growing range of products and surge in members and sales, is creating a solid ecosystem for the company. Additionally, promising upcoming events could lead to short-term gains and long-term returns for investors. As Benjamin Graham once said, "The market may fluctuate in the short term, but the weight of evidence favors SoFi's success." What are your thoughts on SoFi? Do you believe its stock will surge in 2023? Share your opinions with me in the comment section below. And while you're at it, make sure to smash the like and subscribe buttons as well. Additionally, if you want to know more about Chamath's thoughts on SoFi, then make sure to click and watch this video right here and enjoy. That's the end of this video, guys. See you next time.